Okay, this is from discount allowed. We have already mentioned it. Discount allowed, one will go where it will go to debtors account and one will go to profit and loss account. Clear? So we have mentioned it. Discount allowed, one will go to debtors account and one will go to profit and loss account. The next one is what? Discount earned, one will go to creditors account. So that is what? Discount earned, one will go to where? Creditors account. So I'll just write it over here to discount earned. So that is how much? It is 2000. And one will go to where? It will go to profit and loss account, calling it as by discount earned. So that is what? 2000. Clear with this? The next one is return inwards. Okay, return inwards, very important. Return inwards will go where? One will go to debtors and one will go to trading account, which is the sales return. Clear? So return inwards, one will go where? To sales return by return inwards. It is same as what? Sales return. So sales return inwards, how much is the amount for that? It is 6000, and one will go where? To sales return. So we have to total this sales return, that will come down to 1,60,000. From 1,60,000 we have to less what? We have to less sales return. I'll call it as what? Return inwards. Okay, so that is how much? 6,000. That will come down to 1,54,000. Clear with this? 1,54,000. The next one is return outwards. Return outwards will be literally opposite of it. Clear? So to return outwards. So return outwards will be how much? 3,000. One will come in creditors account and one will go where? Less in purchase return. So return outwards. So that is how much? 3,000. So we have to less it and take it the outer column. So that is 1 lakh. Clear with this? Okay. The next one is bills receivable received. Okay. Are you people understanding? Bills receivable received. So where it will go? Very important. Bills receivable account. Clear with this? So bills receivable received. So that will be calling it as what? Very important. How much is the amount for that? That is 14,000. So bills receivable received, I'll write it as what? So we have a double effect for this. Okay, bills receivable received. Where one will come? It will come over here by bills receivable received. Okay, so that is how much? 18,000. And one more effect will go where? Okay, it will go to bills receivable. I'll call it as, from which account we are taking this? Debtors. So debtors, it will be what? 18,000. This is very important. I will star mark this. I will star mark this. 18,000 and 18,000. Clear with this? Okay, the next one is bills payable accepted. So bills payable accepted. Again, this is very important. One will go where? Bills payable account and one will go to creditors account. Okay, so creditors account, what I have to say now? It will be what? To bills payable accepted. To bills payable accepted. So that is the amount with respect to 14,000. And where it will go the other effect, we have to write from which account we are taking it. We are taking it from creditors account. So by bills payable, by creditors. By creditors. Okay. So that is what we have to write it, 14,000. Clear with this? Okay. The next one is bad debts written off. Where does this bad debts will come? Bad debts written off, the amount is 500. So it will come where? One will come to debtors account. So by bad debts, how much is bad debts? It is 500. Clear? And one will go where? Bad debts, it will go to your profit and loss account, to bad debts, because it is an loss. So to bad debts, it will be something what? 500. We have an adjustment for this, so I am writing in the inner column. The next one is stock of goods on 31. So this is closing stock. It will be having an effect of trading account and balance sheet. So by closing stock. So by closing stock, okay, trading account. So closing stock is how much now? It is coming down to 16,000. Okay, and one effect will go where? Closing balance sheet. Okay, are you people understanding? So 16,000. The next one is depreciate building by 5%. So we have to provide a depreciation on all these things. So less depreciation at what rate, Baba? 5%. So 5% of 40,000 will come down to how much? 2,000. So that will be what? 38,000. The next one is 10% on machinery. So less depreciation at 10%. So that is how much? 1,200. So that will come down to 10,800. So less depreciation at 20%. So 20% of 9,000 is what? 1,800. So it will come down to something called as 7,200. Clear? So now all these depreciation, where it will go? It will go to profit and loss account. Clear? So I'll just write it as a heading as to depreciation on. Okay, which all depreciation we are providing? Building we are providing. So building ka depreciation is how much? 2,000. Then comes your next one is machinery. The depreciation is 1,200. And next one is depreciation on furniture. So furniture depreciation is how much? 1,800. So totally we have to take it to the outer column. 2 plus 3 plus 4 and 5. So 5,000 is total depreciation. Okay, the next transaction is make provision for doubtful debts at 5% on debtors. So where does this will go? So always debtors we have to take, that is closing balance we have to consider, but we haven't derived closing balance yet. So debtors we have to derive the closing balance. How will we derive closing balance? When we close down the debtors account. Clear? And on that we have to provide what? The percentage of 5% on debtors. Clear? So this is what the transaction goes with. Now one by one we will try to close down the accounts of it. Okay, so here we need not transfer bills receivable over here, because closing balance is what? The balance with respect to your closing balance of debtors itself. Okay, if this was a closing balance, then we would have transferred from here till over here. Okay, when we have to transfer this to over here, when we have a closing balance of it. So by balance brought down. So total, which is the higher one, we have to check. This is the higher one, 1,34,000, 1,34,000. Minus these all will fetch me how much? Will fetch me something 20,000. So 20,000 is balancing figure. Okay, so balancing figure, where we have to transfer this balancing figure for? Balancing figure we have to transfer over here. 20,000. Now we have to charge what? Less provision. Provision at what? 5%. So provision for 5% will be how much? On 20,000 it will be 1,000. So 1,000, that will come down to how much? 19,000. And then this provision, where it will go? It will go to profit and loss account. Clear with this, all of you? So that is what we have to do. Bad debts we have taken in the inner column. So what I have to do for bad debts now? Bad debts we have to check with add. We have to do like this way, add provision, because there is less space, sorry for that, provision. Okay, there is increase in bad debts, so it will come down to how much? 1,500. Okay, the next account what we have to close is bills receivable account, and then we have to transfer this, the balancing figure, where? To the balance sheet. So which is the highest one we have to check? 18 plus 8, that will come down to how much? 26,000. So 26,000. So we have to minus this, that is 6,000. I call it as by balance carried down. So this will go where? Balancing figure. This balancing figure will go where? It will go to your assets. That is what? Over here. But no space. I'll just write it, manage to write it over here. Okay. Bills receivable. Okay, received, that is what? Very important, 6,000. Clear with this? Sorry, there is no space remaining, so I'm just writing like this way. Now, creditors account we will close. So, creditors account, what we have to do is, we have to check which is the highest. This is the highest one. This is the highest. So, 1,03,000, and 1,03,000. So 1,03,000 minus these all will fetch me something 15,000. So 15,000 will call it as what? To balance carried down, that is what? Balancing figure. This balancing figure will go where? To the liabilities, calling it as what? To creditors, that is 15,000. The next one is we have to close down bills payable account as well. So bills payable account, once we close, this is 14 minus this, so 21,000. So this is what? 21,000. So 21 minus this will fetch me something 5,000. That I call it as what? Balancing figure. So balance carried down, I call it as balancing figure. Where does this bills payable is a liability? So bills payable will come in liability side. So that is what? Balancing figure 5,000. Okay. Bills payable 5,000. Now we have to close what? First we have to close trading account. So trading account we have to check with what are the figures to be taken over here. So this will come down to 1,70,000, 1,70,000. So 1,70,000 minus these all will fetch me something 50,000 as what now? Gross profit. So to gross profit carried down. So gross profit will come over here by gross profit brought down, that is what? 50,000. So 50,000 we have to check with this, which is highest one. So 50 plus this will come down to how much? 52,000. So here it is 52,000. 52,000 minus these all will fetch me how much? 30,000. So 30,000 I call it as what? To net profit carried down. So this net profit, where it will come? It will come to liability side. So add net profit, that is what? 30,000, and then this will become what? 90,000. Then we have to less what? Drawings. Then we have to less what? Drawings, that is what? 10,000. So that will come down to how much? 80,000 when we less it. So we have to total it up. Exactly 1 lakh is a tallied amount for us. Please cross verify this, students, and then cross check your solution also, what I am sending it from your textbook. Okay, thank you. Students, please, okay, I am taking so much of pain because of you people, that you told me to what? Solve the problem. This is what I am solving it for you people. Okay, any suggestions you can give me. Thank you.